Hello everyone, I am Thamizharasu, your business coach. Today we are going to unravel the complex yet fascinating world of business valuation. In this fast-paced and competitive market, understanding your business's worth is not just essential, it is survival skill. So let's dive in and decode the methods and significance of business valuation. Stay with me till the end because each minute is going to add immense value to your knowledge.
1. Understanding the concept of business valuation. Business valuation is the process of determining the economic worth of a company. It's often necessary when selling a business, seeking funding, or managing your strategy. Business valuation is like a health checkup for your business, allowing you to understand its strengths, weaknesses, and areas of improvement. 2. Importance of business valuation in today's market. In today's rapidly evolving market, business valuation is not a luxury but a necessity. It gives you a detailed insight into your company's financial health, assists in making informed decisions, and positions your company favorably for potential investors. 3. Overview of different business valuation methods. There are numerous methods to value a business, each with its strengths and weaknesses. Let's discuss some popular ones in detail. 4. Detailed exploration of market capitalization method. Market capitalization is simply the value of a company's shares of stock times its current market price. It's easy to calculate but can be volatile as it is dependent on the stock market. 5. Times revenue method, a comprehensive guide. Times revenue method involves multiplying the current revenue of the company by a multiplier that depends on the industry and economic environment. It's a simple yet effective way to value businesses with stable and predictable revenues. 6. Analyzing the earnings multiplier method in business valuation. The earnings multiplier adjusts future profits against cash flow that could be invested at the current interest rate over the same period. It's a bit complex but a great method for businesses with a strong track record of profitability. 7. Unpacking the net asset value method. The net asset value method involves valuing the company based on the net value of its assets. It's an effective way for businesses that have significant tangible assets. 8. A detailed look at the discounted cash flow (DCF) method. DCF estimates the value of an investment based on its future cash flows. It's a bit complex to calculate but very effective for businesses with predictable future cash flows. 9. Business valuation, comparing different methods and their accuracy. Each method has its strengths and weaknesses and is suitable for different types of businesses. You should choose a method that best fits your business model and financial situation. 10. Practical tips and factors to consider when choosing a business valuation method. When choosing a valuation method, consider factors like your industry, the size of your business, the stability of your cash flows, and the purpose of the valuation. We've covered a lot today. I hope you now have a better understanding of the importance and methods of business valuation. Remember, a business valuation is not a one-time activity. It's an ongoing process that helps you monitor the health of your business. Before we wrap up, I'd like to remind you to please subscribe to my channel for more insightful content to help you navigate your business journey.